vantage point on the US-Japan currency pair. Only a sustained break of 90.72 will take the pressure off the top side. We've closed the week at 93.01. I anticipate longs will do, I would be looking to enter into buy positions on this pair at the 92.48 area. I anticipate that will hold. Stops, however, to begin the year, volumes will increase. We're going to see volatility. Stops should be below 90.72. Now, going into the Euro British Pound, again, we're going to, the focus this week to start the week will be on the majors. We'll look at the crosses as we get into the week, but for now we're going to stick with the majors. Now, looking at the Euro US currency pair, we can see very much mirrors the Euro FX futures contracts. 144.89 is now a critical level of resistance. 143.73, 143.38 with a close of 143.25. I anticipate 143.73 will hold on a retest, and we're likely going to extend lower from there. We have no buy signal here from vantage point. Predicted TSI, however, is in heavily oversold territory, as is the predicted MACD. Predicted RSI, difficult call here. It's certainly oversold, but it does have room to extend further. So essentially what this tells us is it is going to move higher. Basically what we would be looking to do is setting short positions anywhere between 143.73 and 143.89. Of course, the 143.50, 144.50, 144.89 premium sell, but I really don't see that area being tested to begin the new year. Not in the short term anyway. So looking at New Zealand US dollar, we have a fresh crossover, the 3-day crossing over the 8-day and the 18-day. However, we can see that the 8-day has not crossed the 18-day. Again, the US dollar, based what we're looking at with the US dollar index, there is going to be a very likely, biased in the US, strength in the US dollar, which will translate into short opportunities in New Zealand US. Now, again, this 73, we can see 4 different candlesticks right here. Very important, again, to look at price patterns. This is a very repetitive pattern. If we look down here, we can see December the 4th, 2009. We had the 3-day crossing over the 8-day and the 18-day. We have these 4 candlesticks going over the 3 predicted moving averages. However, the 8-day, again here, did not cross the 18-day predicted moving average. Subsequently, it fell all the way down into the 69 area. We have this pattern repeating itself. However, we can clearly see this time that the 18-day predicted moving average is sitting lower at 71.66. Markets closed at 72.35. I anticipate the 73 area will hold, making this a premium sell area. So again, starting the week, we want to let New Zealand US move a little higher and then set our short positions. Now, going into our next pair, Australia-US, very similar picture here, except we do not have the 3-day crossing over the 8 and the 18-day. However, it did cross over the 8-day. Now, the 18-day predicted moving average currently holding the market below that area. So to start the year, 89.69 is a good area to set short positions. However, again, expect volatility. I anticipate a move on this back towards the 87 mark. But for now, we're going to be looking to basically set shorts anywhere between 89.69 and about 90.50 would be your premium sell zone for that to begin the new year. Now, looking at the US Swiss franc, again, very much mirrors the Euro US currency pair. So again, we're looking at a critical level, 103.30. We've closed at 103.56. 103.63, 103.71, and again 103.30 is our 18-day predicted moving average. Longs heavily favored off the 103.30 area. I anticipate a break. We can see that we have a number of candlestick congestion up in the 105 area, but again, I can see that this area likely to give way in the very near future. So again, short, we're looking at buy positions 103.30 to start the new year. Moving into the Great Britain US dollar, absolutely no reason for us to be holding sterling. That's for sure. 161.61, the 18-day predicted moving average. 160.59, 160.75. We've closed at 161.49, so obviously some volatility here, but To begin the new year, again, I would be looking only to use any strength in the pound dollar to set short positions. The outlook for 2010 for sterling is not good, so again, we want to take this opportunity to get into some short positions, or in other words, we want to find places of good value in the medium term, short and medium term, to buy US dollars. This one here I think will be a good area also. So again, this is the Forex market outlook for the week of January the 4th, 2009. And again, my name is Greg Furman, market analyst here at TraderPlanet.